Welcome to the Future is Gold podcast series, hosted by Alexandra Cosma. We believe in empowering you to take control of your future so you can live the life that you want. And we do that by allowing you to buy, send, spend, earn and secure the world's oldest currency, gold, while being supported by modern technology. At Nauggets, our mission is clear. We're making gold accessible for everyone by giving you the knowledge and expertise needed to make informed and smart financial decisions that benefit you.
Hi, and welcome back to our Nauggets podcast. I'm your host, Alexandra, and this month of podcast is all about education. We will be breaking down the stigma around financial terms and gold-specific lingo, showing you that investing in gold and knowing about gold really can be simple and easy. We are living in the age of information and modern technology. Nowadays, if there is something you want to learn about or understand, information is much more accessible and easily digestible. So learning about gold shouldn't be something intimidating. Through learning about specific concepts and how they apply in real-life situations, you can be more confident in your gold transactions. On this episode, I'm joined by Samantha Kay, our Manager of Marketing at Nauggets. Sam, why is it important to have a basic understanding of the terminologies utilised in the gold market?
Hi, Alex. Thanks for having me here. Look, I think it just comes down to confidence. When you understand or know about a topic, you have the confidence to make informed decisions. At Nauggets, we want our users to be well informed and well equipped with the relevant knowledge so they can feel empowered to make smart decisions for their investments and their future.
Thanks, Sam. Yeah, absolutely. Confidence is key, particularly where money is concerned. At Nauggets, we believe the best way to grow that personal confidence is through self-education. There is something about the gold or investment industries that can be scary to some people. Sam, how difficult is it to understand the jargon and language used in the gold industry?
Surprisingly, not at all difficult. Like any other industry, there is industry-related lingo, but gold isn't any scarier than other fields. My background is in aviation, and aviation is full of abbreviations and industry-related words. Most industries are. It's normal when you jump into a field or area of investment that there is a small amount of learning required. Gold isn't any different. When you can equip yourself with the knowledge of certain words or concepts, everything starts to make sense. Gold really is simple, and investing in gold can be easy. Our ancestors were trading gold even thousands of years ago. It's much easier for us in modern times, and really anyone can learn about gold.
Okay, great, Sam. Well, on that note, let's get started. Samantha, I'm going to fire some common gold terms at you, and perhaps you can give our listeners a short description of the terms.
Of course.
Sound good?
Yeah.
Perfect. All right. The first term I have for you is arbitrage. What is arbitrage?
Arbitrage is the process of both buying and selling gold in different markets to take advantage of the price differentials.
Okay, well, that all sounds well and good, but can you give me an example of this?
Yeah, for example, the gold price at any given time could be different in Sydney than it is in London. Differences in demand and supply in one geographical market compared to that in another market could lead to difference in price.
I guess like a good example of this is the Indian festival Diwali, which dramatically influences the gold price in certain parts of the world, as gold is a popular gift for this festival.
Yeah.
You know, the gold price, it's constantly changing regionally at all times, and I think arbitrage takes advantage of this.
Definitely.
So Sam, my next gold term for you is AU. What is AU?
AU is the chemical symbol for gold, coming from the Latin word for gold, aureum. Fun fact about AU, we put it in the spelling of our brand name, Nauggets.
Very cool. So Sam, the next one I have for you is bullion. We've all heard this word, but what exactly is gold bullion?
Bullion refers to physical gold that is officially recognized as being at least 99.5% pure, that is often kept in the form of bars, ingots, or coins.
I think this term bullion, it can be used for other precious metals too, such as silver. So Sam, the next word I have for you is chameleon. I'm guessing this doesn't refer to the animal, but it must mean something else in the gold world. What is a chameleon?
A chameleon is a broker who changes their position on an investment based on what they think will cause the investor to change the transaction.
Okay, cool. So the next one I've got for you, commodity. What is a commodity?
A commodity is a physical asset with value based on its commercial use and scarcity.
Obviously, gold is a commodity, but so are other raw materials or agricultural products, such as copper or even coffee.
A favorite of mine.
Absolutely. Okay, Sam, the next one I've got for you is derivative. We might have heard this word before. I remember hearing it thrown around in maths at school. But Sam, what are gold derivatives?
Derivatives are financial instruments whose prices are derived from physical gold. The gold derivative itself is a contract between a buyer and a seller that wants exposure to the physical gold price.
While there are many types of derivatives, the most common ones that people may have heard of include futures, forwards, and options.
Yeah.
All right, Sam, the next one I've got for you is fiat currencies. What exactly does this term mean?
Fiat currencies are cash made legal tender by law, but not backed by gold or silver. All major currencies that we know today are fiat currencies. For example, the Australian dollar, US dollar, pound, euro, and yen are basically all the money we know and use.
Okay, Sam, so what's the difference between fiat currencies and gold?
Fiat currency is not supported by any physical commodity, but instead by the faith of its holders and virtue of a government declaration. It's basically a promise.
So, gold, on the other hand, it's a tangible physical asset. Gold is money, it's an asset, and it's an investment all at once.
Exactly.
Which leads into my next term for you, Sam, gold standard. What is the gold standard?
The gold standard signifies an agreement between society and its monetary institutions that the currency they spend and earn is a stand-in for gold. We had the gold standard in use until 1971. It was when all money was backed by physical gold.
To learn more about the gold standard, you can listen to episode 1, The History of Gold, where we discuss its rise and fall. Okay, Sam, my next word for you is a bit of a mouthful, gold exchange traded funds, or ETFs. I think we've all heard the word ETF thrown around, but what exactly are they?
I'll stick with ETFs. ETFs are another way to buy gold without physically owning it. The funds are managed by fund managers who have proven expertise in the gold market.
So when buying an ETF, you buy units in an exchange traded fund, and as the fund performs better, the value of your units goes up.
Exactly. So gold ETFs are designed to move up and down in price as the market price of gold bullion moves up and down. In an ETF, you own shares of the fund, while the fund owns the physical gold.
All right, that seems to make sense. So, Sam, my next word for you is hedging. I'm guessing this doesn't mean trimming bushes. I'm sure it means something else in the gold world. What is hedging?
Hedging is a transaction with the intent of protecting an existing or anticipated market from unexpected price fluctuations. So essentially, you're fixing the gold at the price you purchased it for.
Okay, cool. All right. So the next word I've got for you, Sam, is inflation. We've all heard this word, but what exactly does it mean?
Inflation is a sustained increase in the general price level of goods and services in an economy over a period of time.
So, Sam, how does inflation impact gold investments and transactions?
Inflation increases gold prices. During inflation, the cost of consumer goods increase and become more expensive, thereby making the dollar lose value. Since gold is dollar denominated, its price also increases in line with the rising inflation.
I guess this makes gold a good hedge against inflation, as investors would be converting their cash holdings to gold to protect the value of their assets.
Oh, definitely. Very important to have in anybody's portfolio.
Exactly. So, Sam, the next word I've got for you is ingot. What's ingot?
Ingot is a type of gold bar. It gets its name from the mold that the bar is cast in.
Okay, the next one I've got for you is carat. What does this refer to in the gold world?
Carat derives from the Greek word keratin, meaning carob bean. The term carat is now used to indicate the proportion of gold relative to other substances within a metallic material. Carat is a measurement of purity. The scale goes from 24 carat, which we all prefer, and is over 99.95% pure gold, down to 9 carat, which is under 40% purity. Copper and other metals are usually added when manufacturing jewellery, as gold on its own is too soft.
All right, the next word I'm going to throw at you seems like an easy one. Kilobar. Is it really just what it seems like it is?
Yes, and they're very heavy. A kilo bar is a gold bar that weighs 1 kilogram.
Perfect. That one's an easy one. I think we can all get our head around that. Okay, the next one I've got for you, Sam, is liquidity. What does that mean?
Liquidity refers to how easily you will be able to sell an asset at a widely recognized fair price on the open market.
So, Sam, why is liquidity important for gold transactions?
Gold bullion is considered a highly liquid asset as there is universally recognized pricing mechanisms called spot price that all market participants, buyers and sellers alike, can check at any time to determine gold's current fair value. It's updated around the clock. For example, if you compare gold to an illiquid asset such as baseball cards or fine arts, pricing for these illiquid investments are subjective and there can be great disagreement about an asset's current value.
Yeah, I guess those prices can fluctuate wildly and demand can sometimes dry up. Even when there is demand, the numbers of buyers is a tiny fraction of the gold market, which means that they tend to have poor liquidity. Certain with illiquid investments such as baseball cards and fine arts, as you mentioned, one man's treasure can be another man's trash.
Yeah, that's the beauty in gold. It's always highly valued and highly sought after by all.
Cool. So leading into that, tell me, Sam, what is market value?
Market value is the price at which a coin or bullion can trade.
All right, that's an easy one. Okay, I've got a little bit more of a harder one now to throw at you. Numismatics. What is that?
Numismatics are basically coins whose prices depend more on their rarity, condition, dates, and mint marks rather than the gold content alone. They are valued for their rarity or physical condition. These coins usually sell to collectors or rare coin dealers.
Okay, so basically numismatics are like gold collector coins. That seems easy enough. Perfect. The next one I've got for you, Sam, is paper gold. What is that? Is paper gold money or is it something different?
Paper gold is the ownership of gold which isn't tangible. Examples are ETF funds, mining shares, precious metal funds. Think most trading platforms offer paper gold rather than physical gold.
Okay, cool. So tell me then, what is physical gold?
Physical gold is also known as gold bullion, available to buy, to have, to physically hold. Common forms are bars, coins, and even jewellery.
All right, cool. So tell me, Sam, what is premium? What does premium mean in the gold world?
Premium is the additional cost of a gold coin or bullion over and above the spot gold price, including the costs of fabrication and distribution.
At Nauggets, we allow our users to purchase gold without premiums. We are essentially democratizing gold to make it accessible for all at the current market price.
We do.
We do. So, Sam, what is a safe haven asset? This is my last word for you, so you can explain to us this in as much detail as you like.
For sure. A safe haven asset is the type of investment that is expected to either retain or increase its value during times of market turbulence, which is particularly important in times such as now. Gold is known as the ultimate safe haven, as it's known to perform exceptionally well during times of uncertainty or market downturns.
There's definitely a reason why people rely on gold and why they love to have it as part of a well-balanced investment portfolio. Yeah, Samantha, exactly. Thank you so much for your time today. It's been a pleasure breaking down these simple gold terms with you. Look, after all this, I think it's fair to say the gold industry isn't as intimidating as it seems. The terminologies used, they're fairly easy to understand. If you loved this episode, head to nauggets.com where you will find these terms and more broken down in our gold glossary of terms under our education tab. If you would like to learn more gold terms, stay tuned for the next episode to hear part 2 of the Gold Market Glossary series. Thanks for joining us.
Thanks for listening to the Future is Gold podcast. For links and contact details relevant to this episode, please see the show notes. Don't forget to subscribe to our podcast series so you'll know when the next episode is live. And follow Nauggets on social media for more gold standard content. Information contained within this series is general in nature and not directed to your personal situation. So please reach out to us or your financial expert for a more tailored approach. This podcast is a Story League production.